Hello from Moted Markets. This is Ahura with the global economic outlook in the week ahead, which is going to be the week 51st in 2024. We just finished an amazing week with the South Korean president impeachment, with the French prime minister votes, non-confidence votes, with the political tensions in Germany between the parties, with the fall of the Bashar Assad regime in Syria. Generally, in the geopolitical front, in the political front, in worldwide across the world, we had very interesting days with too many events and too many things to watch and to follow. They for sure they affect the financial markets as well. For example, in Europe, this uncertainty increased the pressure on the euro stocks, increased the pressure on the euro. In the Middle East, this uncertainty increased the oil price. Generally, with the one we had across the world, we can say that the last week was an amazing and a crazy week. But it doesn't mean that the next week gonna be easier. No, we're gonna have an even more crazy week next week. Last week, in between the central banks, also we had a very big surprise. For example, in Canada, we had a central banks meetings in Canada. We had a central bank meeting in Eurozone. We had a central bank meeting in Brazil, also in Switzerland. In Switzerland, while we were waiting to see the 50 to 25 basis point rates cut, the central bank, SNB, Swiss National Bank, cut their rates by 50 basis points from 1% to 50%. Opposite side, in Brazil, where we were waiting to see a 75 basis point rate hike from 11.25 to 12%, BCB increased the rates by 1% to 12.25%. But in Canada, the 50 basis point rate cut, it was in line with expectation. In Europe also, the 25 basis point rate cut also was in line with expectation. While we told, as we mentioned in a previous video, that the European Central Bank had nothing else to cut their rates. Even so many, they believe that the ECB could cut their rates even with 50 basis points. But in a week ahead, we're going to have the central bank meeting in the United States. We're going to have bank meeting in Japan, in China, in UK, in Russia. The central banks meetings across the world in the next week going to move the markets. Let's start with what happened in previous week. At the same time, we're going to check, okay, with this data happened previous week, what we can expect from the state central banks in the week ahead. For example, starting with Japanese economic data last week was somehow positive. We had a better than expected GDP. Even though they were less than previous quarter. For example, 1.2% GDP growth quarter 3 was less than 2.9% in second quarter, but it was better than estimates. Generally, but at the same time, the inflation that we are expecting to see from the Japan next week, which is going to be published on Friday, we expect to see the higher inflations in Japan, to see the inflation CPI to increase from 2.3% to 2.6%. National CPI, not the Tokyo CPI. The national CPI should increase from 2.3% to 2.6%. That's why we expect to see the central bank, Japanese central bank or Bank of Japan, to increase the rates by 25 basis points finally, and they end the year with 0.50% rates, the prime rates. So generally what we saw in the previous months in Japan, that inflation is increasing slowly and economic data, they are not so bad. So that's why we can say that right now, with inflation increasing in other countries, right now it's the time for the Bank of Japan, BOJ, to hike the rates with at least 25 basis points. That can be very helpful and supportive for Japanese yen. Other country that gonna have the interest rates decision is China. Chinese inflation last week fell by 0.6% in November based on the data we had, and in the annual scale it increased only 2%, 0.2%. Both of them, they missed the expectation, and they confirmed with even if you go and look at the new loans that we had, which it was on Tuesday, or it was on Friday. I will find it. With the less new loans that we had in China last week as well, we can say that the Chinese the domestic demand is still weak, and the Chinese central bank doesn't have any other things to give them more. I mean, it doesn't have any other way to give more dovish tones in its decisions, and started to give more stimulus. But at the same time, we know that the last week we had a we had many news from the government and the central bank that they are going to give more supportive programs, economic programs. They are going to have a more dovish plans for the new year for 2025. That's why we generally expect to see the data that we are going to have on Monday also from Chinese labor market data and industrial production. We can see probably a little bit better than expected data, somehow a little bit increasing after the stimulus that the Chinese government had in the previous weeks. Generally, with this data, we can say that the Chinese government right now, with the plans that already they have, you are not going to change the interest rates on their Friday's meeting. So the Chinese central bank will hold the rates at 3.1%, but most probably they will change the RRR, the reserve requirement ratio, by 0.50%, which means that without rate cut, they're gonna supply the market with more cash, which can support the local businesses and small businesses actually to start to have more activities, to have more economic activities, and somehow end the 2024 with more positive tensions, with more positive kind of, you know, this with more positive movement in the market, we can say in this way, with more positive movement before 2025, that they are going to have a bigger plans. Let's wait and see what they have, what they can offer us to the market in 2025. But for now, for the next week, we can say that the central bank in China will hold its rate at 3.1%. Other central bank that's going to have the meeting, an interest rate meeting, is the British Central Bank. United Kingdom, BOE, Bank of England, also will hold the interest rate meeting, which we are expecting to hold the rates at the current level. Why? Because with the economic data we had from the UK, they were disappointing. The weakest economy after German economy among developed economies, it was the British economy in 2024. So the British economy had the second weakest economy among the developed economies after Germany. And also we can say that if you look at the economic data that we had last week, like GDP fell by 0.1% for the second month in a row. Industrial production, they missed expectation. Manufacturing production also as well, they missed the expectation. Even the next week, when we are going to have the labor market data, we expect to see the unemployment rate to increase to 4.3%. These data generally we are expecting from United Kingdom. Even with the PMI numbers, that we are going to see a little bit weaker PMI numbers for both service sector and manufacturing sector, with the unemployment rate expected to increase from 4.3% to 4.6%. Generally, we can say that the British economy is not going to the British economy doesn't have a very good signs. But at the same time, the problem is not about the economic activities, because if it was about economic activity, we should expect the central bank to cut the rates. But why we do expect the BOE to hold the current rates? Because of the inflation. We expect to see the British inflation to increase from 2.3% to 2.5%. And with the new government budget that the Labour Party, after 14 years of not being in power, they came back with the new, very dovish and very supportive government budget that can increase the inflation in the next months. These make the more challenges for the decision, make this decision more challenging for the central bank to hold the current rate at 4.75%, to wait and see how these how this program is going to affect the market, and then they can decide. So probably next rate cut in British central bank in BOE going to be on next February, and for now, for December meeting, we don't expect to see any rate hike, any rate cut. Another central bank that's going to have the central interest rate decision is in Mexico. We can have interest rate decision. The Bank 60 will cut the rates by 0.25% in Mexico, and also we expect to see the Russian central bank to increase the rates from 21% to 23%. We now the Russian rubles getting weaker, with more concerns about the new sanctions, with the more concerns about what's going on about the geopolitical, about this conflict between the Russia and Ukraine, and more pressure on the Russians with the loss that they had in Syria against Turkey and United States. They altogether increase the pressure on the Russian economy. That's why we expect to see the weaker ruble, which increased to 103.5, 104 around this area. That means that for now, the Russian central bank, with the inflation increasing to 8.5%, with the weaker ruble, they expect to see the central bank in Russia to increase the rates by at least 2% in its next week's meeting. But besides that, the next week we will have the United States. I mean, the market focus will be on the Federal Reserve meeting. U.S. economy last week, generally they had a positive data, especially with the data that we had on the inflation front. We know that the U.S. inflation CPI increased in line with expectation with 0.3% in both consumer inflation and core inflation. They increased by 0.3%, both of them. Yes, they were in line with expectations, but it doesn't mean that being in line with expectation cannot increase the concerns, because core CPI increased for the fourth month in a row with 0.3%, and CPI, after 2 months of increasing by 0.2%, this month in November increased by 0.3%. Generally, it means that the inflation should be next concern, not the next concern. It's also already concern, should be more watched and closely watched, especially with the PPI number that we had on last Thursday, increasing by 0.4% monthly and 3% annually. One more time increase the alarms that the inflation is still there, and it's still sticky. The other data, such as the labor market data, which we had with the 242K initial jobless claims, it was more than previous months. It was more than expectations, but still 242K. It's it's not the worst than the pre-pandemic. It's not the worst than normal situation. So that generally means that the normal condition in a labor market, and it means that the labor market in the United States still strong. So that's why generally we can say that the market is now they will look at the U.S. central bank decisions more cautiously for the next week, because in its next week, on next Friday, in its next meeting on Friday, where we are going to see the 25 basis point rate hike, there is almost no doubt that the central bank in United States or Federal Reserve will cut the rates by 25 basis point, which is already it has more than almost 97% chance. So there's almost no doubt on that. But the problem is not that. I mean, not the problem. I mean, it's not important. What's important is that the projections that they're going to have for interest rate projections for next year, for second year, for the third year, and also interest rate projection for the next quarters, and also what we are expecting to see as a inflation, not just interest rate, the inflation, the unemployment rate, the dot plots, all of them, they're going to be very, very important. And the tone of the statement, how the central bank in the United States, how the Federal Reserve is looking to the rate cut fate in 2025, how many rate hikes they're going to have, rate cuts they're going to have. They're going to have the 3 rate cut in 2025. They're going to have the 4 rate cut. How many rate cuts they're going to have in 2025, and what's the final rates, expected final rate for 2025? That's what's the moving the markets. with the data that with the positive economic data we had last week, we expect generally to see that the market's expecting to see the Federal Reserve tone to be a little bit more hawkish, which means more supportive for the for US dollar and a little bit pressure on the stock markets before next week's Santa Rally. Generally, with the data we had, we can say the expectations from the Federal Reserve can be a little bit more hawkish. But still, from the United States, we're going to have the personal income and spending numbers. Also, we expect to see the income to increase by 0.4% and net income and spending to increase by 0.5% in the United States, which means still the inflation should be more concerns. Still, the concern should be more watched more closely. Generally, this is the data that we had last week and gonna have the next week. I think I covered all the important data. In Europe, we're going to have the inflation numbers, which we don't expect any surprise in the inflation. We expect to see the core CPI at 2.7%. This is November final numbers and CPI at 2.3%. So there is no something special in the Eurozone for the next week. In the Eurozone, we're going to have a very quiet week. This is generally what happened last week and what's going to happen in the next week. And let's check the charts. We can start the chart with the US dollar. The dollar index is still strong, above 106, around 106.60. With the expectations, with the hawkish expectations that we have from the central bank, United States, we can say that the US dollar still can stay strong above 106 mark. Even it's fall a little bit down, but still above. We expect to see the US dollar index about 106, which means still the strong, even even falling under 106 to 105.20, even these levels, that means that the US dollar is still strong, and we expect to see US dollar index stay more strongly. But as for the gold, the last Thursday and Friday, the gold lost the ground and fell from 2,700 down to under 2,650. But generally, with the expectations that we have, that was mostly because of the holding the rates higher for longer, actually, which means that we're going to have the higher yields for longer time. That a little bit put the pressure on the gold price. But generally, with the tensions we have around the world, with the getting closer to the year end, we don't expect to see the gold to fall further, and most probably we're going to have the reverse in the gold price. Gold price, as long as trading above 2,620, is bullish, and we can expect to see the year end around 2,700. On the oil front and energy front, we know that as I told about the geopolitical tensions, these geopolitical tensions increased the oil price by more than 2% last week. But also we have to mention that the last week we had the OPEC monthly report, EIA monthly report, and IEA monthly report, and all of them, they increased their expectations for demand for 2025, which means the positive for the oil price. We are expecting to see the oil with the colder winter getting closer to the holidays, and all these together around $70, a little bit higher or down. As long as the gold trade cannot, the initial resistance for the gold is $72 for the oil. Sorry, $72. If the oil can pass the $72, can go further, and we can see the higher levels as well. On the stock markets, the main market driver last week, they were the tech stocks, and these tech stocks, mostly the technology and AI related stocks, they increased. That's why we can see that the Nasdaq had the new records and helped the S&P 500 also to have increase a little bit, to have a better performance. But the Dow Jones, which is mostly about the retail company and the productions and factories, it was under pressure because the main market driver, as I told, it was the technology and AI. That's why we saw that. But we're getting closer to the Santa Rally's effect to be affected in the market. The next week, while we are expecting to see a little bit more hawkish policies from the central bank, most probably till Wednesday until Thursday, we're gonna have the pressure on the stock market, but from the Friday and the next week, the stock market can again can again get back to the positive tone. For the Bitcoin, as long as it's trading above 194,000, especially holding this 97,000 and also 100,000, we can expect the next target around 115K. We know that the next week we're going to have the rate cut in most major banks, especially in the United States. We're going to see that the higher inflation in the different economies, including UK, including the United States, including Europe. That all of them, they help together and they're positive news for the Bitcoin price. So, and also getting closer to the year end, we are expecting to see some cash outs from other markets and put in the ETFs, golds, and some not increased and somehow lower, cheaper stock prices. They're all there together. They can help they are the positive news for the Bitcoin as well. We can expect the Bitcoin still stay strong. This is generally what happened last week and what we're expecting from the week ahead. If you had any other question, don't hesitate to write in the comment section. I will try to get back to you as soon as I can. Have a good week. Bye-bye.